Today I want to share some recent developments in the world of condos, and honestly it's a bit unsettling if you already own a condo or if you're thinking about buying one. There's a lot of information here, so let's dive right in. Most people don't pay cash for condos. Most people need a loan, and most condo loans have typically been what we call conventional loans, which means that your lender takes your loan and sells it to Fannie Mae or Freddie Mac, and then Fannie and Freddie bundle similar loans together and sell these bundles to investors on the secondary loan market. Fannie and Freddie have always had certain requirements before they'll buy these loans. That's always been the case. But in the last year or so, their requirements for condo loans have dramatically changed. Now, hang with me here because the next bit is super important. In the last few years, a lot of condo associations have filed insurance claims for water damage. Insurance companies really don't like to pay claims, so what they've done is to tell homeowners associations, look, if you want us to renew your policy, you have two choices. You can either pay about 3 times what you've been paying for premiums, or we're going to jack up your water damage deductible. That is the amount of money that your HOA has to pay before your coverage kicks in. Most HOA boards don't want to have to tell their homeowners, hey, sorry, but we have to hike up everybody's monthly dues, which also makes it a lot harder to sell condos in their association. So they've opted for the higher deductibles. The problem is that Fannie and Freddie won't approve condo loans if the water damage deductible is higher than a certain threshold, which means that the vast majority of condo buildings and communities in Midtown and Metro Atlanta no longer qualify for conventional loans. Yes, that is what I just said. And this has caught a lot of HOAs and especially condo owners completely by surprise. The only way people have even found out about all this is if they've had their condo on the market, and a week or two after going under contract, all of a sudden the lender says, yeah, sorry, we can't write this loan because your HOA isn't qualified because your water damage deductible is too high. And of course, this has sent realtors and lenders and HOA boards and property managers scrambling to figure out, okay, now what? So for a few months this year, certain lenders we worked with were able to get these loans approved with a workaround. Namely, if the buyer purchased additional homeowners insurance to bridge the gap between the HOA's coverage and the minimum threshold required by Fannie and Freddie. And we all thought, yay, crisis averted. But in the last month or so, Fannie and Freddie have said, not so fast. And they've pointed their Death Star directly at these workarounds and kaboom, right back to square one. Not to get too much in the weeds here, but not only are Fannie and Freddie absolutely refusing to approve condo associations if their water damage deductibles are over the threshold, but in the last few weeks, they've also started rejecting loans if the HOA certificate of insurance doesn't specifically include an inflation guard in this policy. Honestly, this whole thing has been like one huge game of whack-a-mole. It's almost like Fannie and Freddie have simply decided they don't want to deal with condo loans anymore, period. I mean, that's basically what's happening here. So what does all this mean? And this is the super important part. Let me give it to you straight. Over the last 19 years, more than half of my business has been condos, and the vast majority of these transactions have been financed with conventional loans. Unless Fannie and Freddie change their requirements, or unless a particular HOA opts to triple its insurance premiums, conventional loans can no longer be used to purchase condominiums. And of course, this is huge. So if you can't get a conventional loan, how do you buy a condo? Well, there are 3 ways. The first, of course, is cash. But assuming you don't have enough cash to pay all cash for a condo, there are a couple of other options. The second is a private, or what's called a non-conforming loan. This type of loan is made by, let's say, an investor group or any kind of lending institution that keeps its loans in-house and doesn't sell them on the secondary market. For instance, Buckhead Bank. Typically, these loans carry a slightly higher interest rate than conventional loans, anywhere from 0.5 point to a full point. So they're definitely not as attractive as conventional loans, especially when interest rates are trending a bit higher. But it's an option. And finally, there's FHA. Especially if you're a real estate agent, this is where you really want to pay attention. FHA loans are different from conventional loans because they're insured by the U.S. government. Way back during the Great Depression, only 1 in 10 people actually owned their own homes. So the Roosevelt administration created the Fair Housing Administration to make it easier for people to buy a home. And the same principle still applies. Basically, FHA loans are usually much easier to qualify for than conventional loans. Your credit score doesn't have to be as high, for example. You can have a higher debt-to-income ratio, and their interest rates are usually lower. And where the minimum down payment for most conventional loans is 5%, FHA's is 3.5%. And by the way, under certain programs, you might even qualify for 0% down. Right now, for instance, if your home was destroyed or rendered uninhabitable by Hurricane Milton, and that can either be a home that you owned or an apartment, let's say, you could qualify for a no down payment loan. But I digress. Here's the rub. Not every condo community is approved for FHA loans. There's a lengthy application process and fairly stringent requirements. And even if the community does get approved, it only lasts for 3 years at a time. Sometimes HOA boards don't even know about FHA approval. Sometimes they know about it, but they don't want to be bothered with the application process. And sometimes they simply forget to file for renewal. Or, and believe me, I've seen this a lot too, certain HOA boards don't want FHA approval because they think it takes away from a certain exclusivity that they want to convey to real estate agents and prospective buyers, because in some way, I guess they think it would detract from their property value or cachet. But that was before it was next to impossible to get a conventional loan. So here's the bottom line for condo owners and HOA boards. You need to do whatever it takes to get your association FHA approved as soon as possible. Do not pass go, do not collect $200, do not discuss or debate or delay, just do it. And here's why. If you list your condo for sale and buyer's agents look at the listing and see that number one, it's not eligible for a conventional loan, and number two, it's not FHA approved, the vast majority of agents will just keep scrolling, and you're screwed. Except, and if you've made it this far, here's your reward. I would estimate that 9 out of 10 real estate agents, and I mean good ones, even the ones who've sold a bunch of condos in their career, and maybe even a lot of lenders, aren't aware that even if a condo community isn't FHA approved, you can still get what's called a spot approval on a particular condo unit. The buyer and lender can go through an application process with HUD to get that particular unit approved for an FHA loan. Now, you'll need the HOA to complete and submit a questionnaire, and that takes about 3 to 5 days for preliminary approval. And then there's an FHA appraisal, which is a bit different from a conventional loan appraisal. So, yeah, it takes a bit of work. But listen, if your buyer doesn't have the cash and a conventional loan isn't an option, and the buyer doesn't want a private loan because of the higher interest rate, and the HOA isn't already FHA approved, this is the only way you'll ever sell your condo. Buyers, you may need to specifically ask your agent and lender to explore this option because, like I said, chances are they may not even be aware that this is a possibility. If you want to see if your condo association is currently FHA approved, visit the HUD website. And if you have any other questions, whether you're a buyer, a homeowner, an HOA board member, or a fellow realtor, please let me know. I'm happy to help.